Greetings, everybody. Good morning. This is Jeff Scott. This is my top-down review for August 8th, 2021. It is early morning before 9 o'clock on Sunday. I got hung up watching women's volleyball and women's basketball last night. Decided to skip the video until today. Well, that was exciting, wasn't it? The U.S. had one of their best Olympics ever, despite the fact that men's track and field had some pretty glaring issues. Kind of nice to see the U.S. take the lead on gold on the last two events as well, one of the last two events. Anyways, again, my name is Jeffrey Scott, and my email address is hgsidoc@gmail.com. I titled today is Climbing a Wall Worry, a New Olympic Sport, because if it is, this market gets a gold medal. Disclaimer, this is for education purposes only. If I recommend the stock, it's in the spirit of education and investment advice. I'm a doctor, not a broker. I am independent. I pay for the tools that I use. Trading involves risk, and you and your own are solely responsible for any investment decisions you make. If I get around to it, I'm going to talk a little bit about some options, probably on Generac today. And if I do, again, it's for education only. And I highly recommend you go to things like the Options Industry Council, where they have a ton of outstanding free education. And options can be something that can help your portfolio, but the powers that be deem them to be risky, and therefore you should know what you're doing before you take that risk. All right. I'm going to turn something off on one of my machines so I don't have a conflict. There you go. All right, so I used to do live education a couple times a year when I was retired. And then when I started this company, I stopped. When I did my education, I told people to be their own guru. I learned that from Ian Woodward up here. Learn from smart people, whether it's reading their books, going to their live meetings, going on their cruises, whatever. Get exposed to a lot of smart people, and then come up with your own style of trading, which I call be your own guru. Not a whole lot of changes here except for the one under Thinkorswim. So let me make a couple comments. If you check me out during the day, if I'm not working or on a Zoom call, which is more and more likely, you'll see TradeStation and Thinkorswim up on one of my monitors. You'll notice that they look very similar from what I put on them, the John Person indicators, Dr. K stuff, Sagar's Q tools. I usually have Sagar's Q tools on another monitor, his Edge, during the day. It's fantastic. I use HGIS and EdgeRater extensively for analysis. And then I've now started to play with wealth charts. It's probably going to take me months before I feel comfortable enough to actually show you how I use wealth charts, because I'm still figuring it out. It's not a very confusing program, but it's like, where do you start if you want to go read the encyclopedia? It's just so many different things. And a lot of tools that I used to have to pay other services, like unusual option activity, is something that's built in. There are option scanning tools as well. So I've actually got rid of a couple things, and for those that know me, that never happens. I'm never paid by any vendor when you buy something that I suggest or use, and any affiliate fee offered to me is passed on to the purchaser as a discount. I'm an unpaid volunteer. This is just education. I just want to go back and make another comment about wealth charts. You'll probably, if you're like me, have ever done anything online or with email, we'll start getting emails from Become a Better Trader, Rob Hoffman, sometime in September, early October for his next Wealth 365 event. I highly recommend it. There's a number of speakers over 5 days. I can't believe how hard Rob works during this. He stays online for 3 or 4 hours after the meeting is done each day. Not only can you learn, and not only are most of the speakers independent, well, they're all independent, pretty much all independent, and some don't even use wealth charts, they use other tools. But if you're going to buy wealth charts, you want to buy it during an event or one of his other special programs, because he pretty much gives it away based upon the current price of, well, I'm not even going to say what I pay. If you watch his seminar a couple weeks ago, you'd be paying the same as me. And if you get it in October, you're going to pay it the same as me. It doesn't replace HGSI, but boy, is it a nice tool. HighGrowthStock.com is the website for HGSI. Don't be deceived by my email address. I have a DOC at the end. I am not an owner of or controller of or on the board of HGSI. I'm just a happy user. If you go on your free 30-day trial, you get for 30 days without even a credit card. And under investing strategies, you're going to see hundreds of movies. One of these days, the website's going to change and it'll look different, but those two things aren't going away. Stock patterns are cyclical. Stocks are clinical. ETFs, indexes, I don't care what you're looking at. If you get down to any time frame, you're going to see this pattern over and over again. So the issue becomes, where are we? And as I said for weeks, it's like we've truncated the top. And whenever it feels like we're going higher, like this week did, typically the next week we come back into a trading range and pull back. When it feels like we're rolling over and I'm starting to get a little bit more bearish, we take a move up. So, fool me once, fool me twice. But at some point you got to realize we've just been trading in a trading range with a slowly rising top. And I don't think that's changed. So it's probably not a time to be a hero. When I say it's not a time to be a hero, that means there's some uncertainty in the market. And I've raised cash. I have smaller positions. I sell premium. I still have a lot of stocks, but I start to put collars around them. And last week for me was particularly ugly, where I had a big position in Roku. Roku actually came back most of the way. 5R did not. Thank God I had puts on it. And the other one that hurt me was Quidel, but again, I had puts on that. The benefit of buying puts is it limits the downstream damage, so you don't end up killing your account, but it also limits your upside opportunity as well. If the stock trades higher, you bought insurance, which costs money. So I don't think it's time to be a hero. Am I a bear? It wouldn't take me much to start feeling more bearish, but no, I think right now I'm still in the same camp as I was last week when I said I think the market will go reluctantly higher, but if we have a correction along the way, it wouldn't surprise me. Bank of America, whose market analysts obviously know a whole lot more than I ever will know, and who have access to even greater information than I do, came out with a pretty bearish target for year end on the S&P, but I'm not sure that they represent the crowd, but it was an opinion of a smart person. If we look at Friday sector reviews, so I basically have the different stocks that make up the main S&P sectors. I have a few added that are interesting to me. And what do you notice? You notice there's a lot of green, so that's bullish. Certain groups like financials, energy, materials were super strong on Friday, and they were three of the leading groups. But then you notice things like discretionary at best 50-50, utilities more weakness, healthcare 50-50, REITs probably less than 50-50. So even though it was a strong market, except for the Nasdaq, it was not a great day. One of the speakers from the wealth charts world calls it either technology or the everything else market. And this week, except for on the Wednesday ADP report, this was a week about everything else. We're going to talk a lot about the banks because as much as I have not been a giant fan of banks, I do have a number of positions, and maybe it's time to become a bigger fan. Let's take a look at the major markets. Pull this up here, and let's open it up. Sorry for the background noise. I work from my house, and my wife walks around using her phone. Let's see if I can ask her to be a little quieter. Well, that ain't gonna happen since I can't even find, oh, there it is. All right, yeah, I've got this big house, but everything's wide open, and the sound just bounces everywhere. All right, so back to the story. E-minis, lower left, upper right. That's always good. When you see the balloon on the last bar, that tells you we set an all-time high, or at least a high for the year. In the case of the S&P, and the next three are two all-time highs. Now, the bullish story is we set an all-time high. We were in a beautiful run up. It's not like going up the face of a cliff. It's more of a gradual descent. We're not horribly extended, although we're getting ways away from that 200. What's not to love here? You have had a sideways movement, but you broke out on Friday. We'll see if that's a bull trap or if we're going to go on to new highs. You got to love it. All right. Look at the Nasdaq Futures. Not quite as low on the left. I mean, they'd had much of their run up probably before this period of time. But again, a nice steady gain, set an all-time high on Thursday, which is pretty impressive and exciting. Just off of it a little bit on Friday. So even though Friday was a tough day, if you look at a weekly chart, they set an all-time high this week as well. Again, sideways the last couple of days, very close to where it might break out. Dow Futures, again, not only sideways for the last couple of days, but you could argue they've been in this box here since, going back to April or May, where they're range bound. And, it's sort of how the whole market is. During periods like this, you feel like the Dow's on fire, and then it's had the most significant, or some of the more significant pullbacks. Look at the Dow, all-time high hit on Friday, all-time closing high on Friday. It took out the May high here, and that has sort of been the leg that I've used for the, triple, quadruple top. So if we can hold that, that has to be considered bullish as well. I look at the Russell, the least bullish of the bunch, but except for the fact it's under the 50 here, it's also in a big sideways move as well. And it's near it's sort of near the middle of the range. We'll come back to that later. And notice it hasn't set an all-time high since March. The VIX trended down this week. It fails at the 200. It comes back. It's sitting right below the 50. I don't see any signals there. And the dollar rallied on Friday on the strong economic news. And it seems like on strong economy days, dollar rallies and interest rates rally. The everything else market, as I defined earlier, non-technology rally. And what falls are bonds and technology. And that's kind of what happened on Friday. So that is how I look at the markets. And I always start with this because at the end of the day, what's going to determine the performance of my holdings is going to be the performance of the major industries. Again, looking at weekly charts here, you could see the last bar on the S&P futures, Nasdaq futures, and the Dow futures all closed at all-time highs. And although I am less excited, perhaps, about the Russell because of the sideways movement, it's just below its all-time highs as well, and actually joined the party last week with probably the biggest green bar of the bunch. You can see the VIX is not quite to where it was in 2021 and earlier, but it's come down quite a bit. And although the dollar started to rally, it's still fairly low in its pattern. Now, the other thing we started looking at are these expected move charts, and this would be another week where the market makers who write the option contracts win. I'm looking at the expected move, which is basically the move predicted by an at-the-money straddle. It's the market, you're buying a call and you're buying a put, and you're probably paying the premium, the distance between the green and the white or the white and the red. So the market maker basically knows that as long as the price closes between the green and the red, which it does, as I've looked back, about 80% of the time, which is a little higher than statistics would have predicted, then the market maker wins. And even if you get some money back from your option, you won't get back your full premium. So look at how little movement the E-mini futures have had, going up 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days. They've been in 13 days, a very narrow range. So yes, this market has eked out a high, but it hasn't moved much. So the market's been relatively flat. It would have been a good time for a market maker last week to sell a straddle. How about on the Nasdaq futures? A little bit more movement, but you got 1 week, 2 weeks, 2 weeks where we closed within. The prior week we actually closed outside, within, outside. So for the most part, the Nasdaq has been closing within. How do I use this? Well, I know since the majority of the time it closes within, that if I get a move outside in a reversal candle, I take a trade in that new direction. For example, this is the Dow Futures. Again, just like the S&P, relatively flat. Option sellers won this last 2 weeks. 3 weeks ago, it opened up, and I remember I got my friendly favorite neighbor text, oh no, the market's going to be horrible today, and I ended up doing okay that day, but the market opened up down big. But right away, you had a reversal candle. And when this reversal candle on Tuesday traded up, it was time to get back into the market. It got back within that expected range. So you can get reversals. You also know if you get way, way, way below or above, you're probably going to get stretched and revert to the mean. So we look at the Dow Futures, not telling me anything. They stayed within their range. The Russell also within their range. They traded down and came back up and traded positive on the week. But again, market makers who sold the options did well. The VIX did nothing. And the dollar really bounced hard on Friday, but stayed within its expected move. So not a whole lot of help there this week. So let's get rid of that one. What's underneath? So rates trickled higher on monthly unemployment numbers on Friday. Bit of a surprise because we had the opposite signal on Wednesday when the rates fell. Now, we know that rising rates, and you can see they didn't rise a bunch, but they rose both on the 10 and the 30 as well as most of the others in the complex. Rising rates are good for fill in the blanks. Banks, especially regional, and insurers. When you see my buy watch list, which I build from a bottoms up perspective on the weekend, you will see a ton of regional banks. KRE is the ETF. Well, what about all this divergences we've been seeing? Well, if you look at the large cap Russell 1000, the white AD line all-time highs, price all-time highs. You look at the small cap Russell 2000, we have not hit highs on either price or AD line, so you have lagging. If you look at the Nasdaq, all-time high on price and AD line. I mean, how bearish is that? Not very, is it? And if you look at the NYSE, this is bothersome perhaps. AD line still well below the top, but it did turn positive. The Qs, the spiders, and the diamonds, all-time highs. Small stocks lagging. This here is transports. So what does it mean when your Dow's up and your transports are going the other way? I guess if you're a Dow theorist, that's a problem. TLTs turned down a little bit as bonds turned up. Breadth, looking at stocks above the 200, they dropped a little bit, while stocks above the 40 moved up. Well, you know, it takes longer to move up above the 200 than it does above the 40. You know, we're steady with most of the stocks in the market, or the majority are above the 200, but a lot of them are still less than their 40, which puts them sort of in a no man's land. Now, the other short-term breadth indicator I look at is the T2121, which is a 13-week or 3-month new high, new low. When it gets to the extremes, it's an incredibly useful reversal tool, and it's sort of in the mid part, upper part of the middle, improved this week, not giving a signal. The Daily McClellan, stay tuned. Stay tuned because we finally broke above the zero line to stay on the oscillator. And if it could continue to go higher, we will break some of this negative divergence. Even the summation index turned up. Got a long ways to go to break the negative divergence, but we've been talking negative divergence on this for years. Weekly, similar story. We've broken above the zero line. Still not much going on in the summation index. Now let's look at some of the other things that I use to understand the underlying market. For those who are new, I am a top-down active investor. That means I expect most of what happens to be driven by the stock market, then the industry group, and lastly, the stock. When I say I'm an active investor, it means I am not a day trader. Let me say that again. I am not a day trader. I am a swing to position trader. I have stocks or option positions like Generac that I've been in since the day I gave them to you guys when it was 100. It's now over 400. At the same token, I have things that I'm in less than 30 days. It really depends on the performance of the underlying. I will buy stock and roll stock up and out, meaning to a higher strike price at a later date as my stock moves in the direction I want. I like the options because it's sort of, when I do that up and out movement, it gives me a trailing stop because I get to put in the bank the money that I made up until that point. And so I don't have these big drawdowns when the market goes against me. Doesn't always happen, but it certainly has saved my bacon many times. So the buckets, imagine you take all the stocks in the S&P 1500 and you put them in their Bollinger Bands. And you ask the question, what percent are above their midline? That's here. 2/3 of the stocks in the S&P 1500 are above their midline, bullish. And then I look to see how many stocks are either below the bands or above the bands, and 12% is not a big number. So I see no signal here to worry me, and this is a bullish close on Friday. The Hindenburg Omen is a signal that not everybody believes. It sort of signifies a market top where the professionals are dumping their stock and us amateurs are buying them. Classically, it's determined by the NYSE. Had an email exchange as a third party with Chris White of EdgeRaider this weekend, who talked about how his universe is different than HGSI. He may have already changed the stock's ticker when HGSI is delayed, and there's not perfect matching between the two. They also use a different source for indexes and for stock quotes, so they don't always match. Classically, the Hindenburg is calculated on the NYSE, and there is none. If you see one, only about 1 out of 4 are they meaningful. But when they're meaningful, they're really meaningful, and 1 out of 4 times you can get a significant market pullback. There's not been a major pullback in the markets since World War II that was not associated with the Hindenburg Omen. We saw several of them popping up on the Nasdaq in the last 2 weeks, but by themselves, those are not the signal. The signal is the NYSE. Market tone, it's mixed. I mean, we got a couple green, we got a bunch of yellow, and I'm looking at the Woody indicator. These are a bunch of indexes. Just tells me that, you know, we're not as strong as you think with that S&P 1500 buckets. A week of rotation. So using the fundamentals from a week ago, ask what happened going forward. And I guess there's a little bit of improvement in the middle here with growth. We always throw out the tail and the head because there's not many stocks. But the bottom line, it wasn't a big movement week. And I think it wasn't a big movement because some groups went down and up, some went up and some went down, and they all finished up kind of near the middle. Earnings per share rank, yeah, that was good here, but it was okay back here. This is return, this is higher rank. Relative strength rank, high growth worked in that respect. Group didn't seem to matter, and stocks that were accumulating the prior week seemed to do okay. So that's a flattish looking week to me. Over here in green are some of my performances. If I look at my stocks that I ended the week with last week, they were up a little bit, 0.34. Put most of my money in my filtered buys, which were 12 and 2, up 2.48. In yellow are the various Investors Business Daily Market Smith groups. So growth clearly outperformed me, but also outperformed the S&P 500, which was up a little bit less than 1%. If you've looked at this way of me looking at data before, these are very compressed numbers. Sector strength. Now this is looking the Woody indicator across the S&P 500 sectors, and you can see predominantly green, suggesting strengthening in the sectors. Here is the Q Edge tool. I love this tool as an adjunct to HGSI. We got 3 rows here. Row number 1 is sector, row number 2 is industry, row number 3 is stock. We have 1 month, we have 10 days, 5 days, 2 days, and 1 day. We've now got to a point where over the last months, the markets have turned more favorable, where over half the stocks, industry groups, and sectors have been positive. Even stronger on Friday, 68% were green. Now, I hate this because Friday, since I'm mostly technology driven and some of the biotechs, I actually didn't do as well on Friday as the market. But when the market pulled out and pulled lower earlier in the week, I did okay. So, you got to look at your overall performance, not day to day. Here's that 65% at 66 in Q. It's doing this real time. I can see the buckets real time. And during the day, you'll see it get up to 30, 40%. And you might as well go ahead and short or take profits because you know it's going to go the other way. Sectors, 5 days, 7 winners, 4 losers over a week, 10 to 1. And over a month, 7 to 4. On Friday, the only sector that was down was, looks like healthcare. I do this as a projector, so it's easier for you guys because it's an 8K monitor if I do it on my computer, and you'll never be able to see anything. So sometimes it's hard for me to see the little stuff. So healthcare looks like it was the loser on Friday. But on the week, healthcare, it was down a little bit on the week, okay on the 5 days, and on the 10 days in the monthly. So most of the sectors were up, so that's bullish. Now, you might find and ask the question, Jeff, why is a sector up on Edge Rater and down on Q or vice versa? Simple. Edge Rater sectors are built upon the S&P 500, and Q sectors are built upon the S&P 1500, so they're broader. So it's possible, especially in the market where the big guys have been leading, so the S&P 500 may look strong, and the S&P 1500 may actually look like a laggard because it has smaller stocks there. Now, if we look at Friday, the leading group was financials, which has really moved up the last month. You can see the blue coming in here. It had a couple months of weakness. Materials was up there. And energy surprised me when I saw this because energy also has been going through a weak period. Part of the quote, everything else, stealing his name Zaid's terminology. What lagged? Healthcare, utilities, communication, discretion, real estate. What would you expect to lag if the economy was doing well? You'd expect defensive plays to lag, like staples, real estate, and utilities. So maybe shouldn't be surprised. Now I asked the question then, within financials and materials, let's stick with just the top 2. What are the leading groups? All right, and these would be the top 10 groups in those 2 sectors. All right, and you can see I have 147 industry groups. These 10 are in the top 16 groups in the market. So I hit the peer analysis and I went backwards. I missed a sheet. I got a list of the stocks, and the ones that I really liked let me pull it up. Let me show you. Give me a momento. Show you how I use this tool. I mean, I always beg Sagar to figure out how to use HGSI as a data source, but I don't believe, he says it doesn't have all the things he needs and he can't get it out of Toss or Thinkorswim. Because as much as I love this tool, I would love it even more if you guys could use it with TradeStation or Thinkorswim. All right, so we're updated through 9/11. I guess that's probably the time it is right now. So these are the things you already saw. Let's take a look at the sectors. Let's rank them by best financials and materials. I highlighted them. Now I'm going to click the gears. It's going to bring up the various industry groups. Let's rank them. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So I'm taking the top 10. I'm looking at them. I got agrochemicals, aluminum, regional banks, copper, forest, diversified banks, steel, specialty, more banks, and insurers. I'm going to hit this, and it's going to pull me out a bunch of stocks that are in those groups. So if I make this a little smaller, you can see these are all within those top 10 groups. Now, if I hit the 3 stars, this is how it's been set up by Sagar, it'll bring up stocks with good earnings per share growth and those that are undervalued. And this is a great place to go fishing for. Then what I might do is I might highlight these, do my grid there, and now let's see if I can make this happen. I can make the magic happen. I could dump those into TradeStation, and notice they all were up on Friday. And one of the stocks that I liked a lot of these, frankly, but one that I liked a lot is Consumer Bancorp. Uptrend, pullback, and new person buy sign on the weekly. And then on the daily, you can see a nice trend line support, and Wednesday came off support. What's not to like here is it's got some resistance overhead, and that might be something to be concerned about. This is, let's see, I think that might be just garbage. Let's see. Yep, that garbage is gone. So I went through these, and then since I like QB, what I did is I brought up the Vital tool, because the Edge tool is limited to what's in the S&P 1500, the way I've set it up. And this is pretty cool too. In the Vital tool, go to the home page, I put in QB and it automatically found the other stocks in that regional banks. Now, unlike Edge, which is limited to the S&P 1500, this one could look US, out of US, and I could decide if I want just the industry group or similar industry groups. Notice the green pie here. Every stock in regional banks was up on Friday. Notice here the strong fundamentals of earnings per share growth of QB. That gets me excited. The blue here, maybe that's what cyan is, but I'm not good at colors, colorblind. Shows me it's undervalued. When I hit that, it's going to bring up the fundamentals on all of these stocks. And again, I could do the 3 stars, and I could look look at these, which I did. So when I went through, back to the presentation, these are some of the charts I like. Here's Citibank, new buy signal on the weekly. Been in a buy. This was the time to buy it, but at the time it wasn't in a buy signal weekly. Trust Company Bank, another one I liked. Here's my Customers Bancorp, and then Timken Steel pullback breakout. This one broke through a trend line resistance. Again, you're getting into overhead supply on all of these because they pulled back. But I'm going to be watching them because I think regional banks might be, as it says here, a safe haven as rates increase. Now, I got this, apparently it was on Sentient Trader, Robert and Lori Robert, one of the speakers at Wealth Charts put this up, and I went, and this was tweeted by Ben Eifert. And, you know, a lot of these stocks have had crazy moves, and then I hear about things that I didn't know what they were, gamma squeeze. And this was probably the best explanation of gamma squeeze I've ever heard. So when you buy a stock, or you buy, let me back up. When you buy a call, there's the Greeks. One of the Greeks is called delta. Delta is gives you a number that you know, if the delta is 25 and the stock moves $1, then the call is going to move 25 cents. I also learned that if the delta is 25, there's a 25% likelihood that the stock is going to finish in the money. Now, gamma it measures that the change in delta when the stock goes up. So if the stock goes up, your delta goes up. All right, that makes sense if delta is predicting your likelihood of finishing in the money. If the stock price goes up or the call moves into the money, delta, or closer to the money, delta goes higher. But there's sort of this nasty game that's occurring, and it's just the way it works. Let's say I buy an Amazon call, all right? Now, the market maker's job is not to speculate. The market maker's job is to maintain order. And they're going to buy Amazon so that if Amazon goes up, they have no risk. So they're buying Amazon as a hedge. Okay? Now, since the delta when I bought Amazon was 21, they know for every call, which is 100 shares, they need to buy 21 shares of Amazon. So they buy 21 shares of Amazon. Now Amazon, hey, I did a good buy, Amazon goes higher. So what happens to the delta on that original stock that was 21? Well, it's closer to the money, it goes to 26. So now the market maker doesn't have enough Amazon shares to hedge that call. So what do? They have to buy more shares. Now Amazon goes up again, and then Ben Eifert called this a gamma explosion, where the delta jumps, and he now has to buy 47 shares because the delta is now 73%. You're way in the money. So I bought an Amazon call for $1,500. I haven't bought any more calls. The market maker, as that stock has gone up, has had to buy more and more, has bought $230,000 worth of stock as a hedge. Now, imagine with some of the option volume out there, the hedges that are being bought. So you get a gamma explosion that causes price to go higher and higher and higher. Well, guess why? Because the market makers are having to buy more and more stock. Guess what happens when my option expires or I sell my option? Well, then the market maker is sitting on a bunch of stock that was hedging a position that doesn't exist. They unwind their hedges. So you're going to get major market moves, which, you know, now everybody talks about gamma squeezes. We see that with AMC and GameStop, so Robinhood. I think we're seeing a lot of gamma squeezes in this market. Now you know what a gamma squeeze is. Canaries in the coal mine, these are some of the top big tech stocks. They've been resilient, and they moved higher a little bit this week, I think like 1%, slowly climbing. A wall of worry is weekly bongo, which is my long-term trend indicator, has turned green. Know your news and earnings. There's a number of things here. Here is the news week. You've got CPI on Wednesday. You got jobless claims on Thursday. Those are probably the big drivers, but you also have a lot of Fed heads speaking. Here are some of the earnings coming out this week. Something for everybody. I've got some upstart I'll probably dump, which means it's going to go higher the way things have been going. I got one other thing I thought I had here. I've got NEO. I've got a pretty big profit in NEO. I'll probably let NEO ride. Coinbase looks interesting to me here, but I probably don't chase it before earnings. Now, remember when I talked about expected moves? You could also use the word implied move. Again, what's the cost of an at-the-money straddle? So these are the implied moves or expected moves on some of the earnings calls this week. Where do I find all this fancy information? The internet, Twitter, and Twitter. You don't need fancy technology to figure that stuff out, but it gives you an expectation of how much it's going to move. The higher the implied move, I can assure you, the more expensive the calls or puts to protect yourself. It is a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. Market thoughts for the week. The market muscled out a trio of closing highs. Risk sentiment was supported by encouraging round of economic data, at least on Friday. Russell, did well, up 1%. Economic data whipsaws. ADP was bad and pulled the market down on Wednesday. Then on Friday, the employment situation improved. Non-manufacturing ISM was good. Manufacturing activity was good. Trade balance saw imports outstrip exports because of pent-up demand. Weekly continuing claims dropped below 3 million for the first time since the pandemic began, and you started seeing some of the Biden administration taking victory laps. Rates are key. The economy is perceived as good. Rates are up, bonds are down, dollar up, oil up, technology down, banks are up. So good economy, the everything else market that I introduced you to earlier will be higher, and technology will be weak. If the economy is bad, rates are down, bonds are up, dollars down, oil down, banks are down, and technology rallies. What led us off the bottom during the midst of COVID? Technology. It's that reflation trade that has flipped that scenario. News flow likely to dominate both employment and CPI and Fed heads. The market is resilient despite poor seasonality, news flow divergences, and continued bearish concerns. It continues to move higher. I still am not expecting a crash, but a correction still would not be surprising. Last week felt too whipsaw-like for me. I pulled a lot of profits out. In fact, I pulled so many profits out that my current holdings are a little bit negative. I took profits out of the market. Although I'm still, long facing with a lot less invested. My bigger positions have protection. I got hurt by earnings last week, QDL, 5R, and Roku tumbling, but HubSpot made up for a lot of those issues. Spelling check. Remind me of risk of holding through earnings. All right. I know that if you're new, you're going, my God, it's 45 minutes. He hasn't told me anything. I'm a top-down guy. I just told you a lot. I told you what I think the market's going to do. And frankly, I think that's the most important thing I tell anybody, is what I think the market's going to do. In HGSI, I've updated it this morning. I'm on the O1 markets, Picture Markets Plus, looking top-down view. Now, when I see utilities as a leader, this can't be right, is it? Yep, nope, shoot. I didn't think utilities would be the leader. There you go. We got small caps, mid caps, Bitcoin, Dow, NYSE. It should have been a good week for growth investors. We're going to take a look at it, but it certainly suggests that. I look down here, VIX, silver, gold, gold miners, oils, treasuries, gas, commodities. So this looks like a growth on review. Here's the S&P 500. You do not need to spend much time here. Sort of a straight run up here. Nothing red on the right edge, which means no signs of bearish signs. Where we look at my trade station just very quickly. I know I'm already running late, and I'm not going to go through all the index. I just want to look at one thing. E-mini high jump is at 69. It can go higher. Dow high jump is at 51. Russell high jump is at 14. Nasdaq high jump is at 67. None of these signal the market has to fall because it's too extended. So things that are going up have a tendency to go up further than anybody thinks they will. We have a fresh breakout of prior highs here. It'll be interesting to see if it holds. You got to be bullish looking at this with the asterisk of at some point when you have a run off the March bottoms to this point from 2,200 to 4,400, market's going to take a breather. But it's taken lots of little breathers, which have been pullbacks to the 50. But at this point, we are only 3% above the 50. So 50-point move in the S&P, it will hurt, but it doesn't seem to be that unreasonable an expectation. Dow Jones Industrial Average, you could argue similar when you look at the weekly, but it's really gone sideways. And as I mentioned earlier, it just took out that prior intraday high going back to May. So, if I had to be a buyer or seller, I'd rather be buying this one, setting up at a base, a mobile breakout from a squeeze, the weekly bond yield turned green, had a new John Person buy signal. So the Dow looks okay. If I go down and look at the Russell, the one that doesn't look as good, it's below the 50-day moving average here. I like to see it move up above the 50 before I become a buyer. But looking at this, would I be a buyer or a seller if I was forced to pick? I'd probably be a buyer. Notice the weekly bond goes red because of this junk that it's been in. Notice what happens when it's solid green. It has a nice move. To me, we're in a trading range. The bottom is defined. Well, I can even draw it. I think I've drawn it multiple times before, so I'm just going to draw it again. Somewhere in this area is where we live in the Russell. And until we break out of that area, we're in a trading range. You can be bullish on the bottom and bearish on the top. We're right in the middle. Nasdaq, the one that I follow most closely based upon my portfolio. Modest bad day on Friday, really an inside bar, right off all-time highs, weekly closing highs. Again, it's easier, I think, to be bullish here than bearish. Now, I always like to look underneath, so let's start with the Nasdaq Biotech. Pull back a little bit on Friday. If you look at the biotech ETFs, they are weighted with Moderna, Novavax, BioNTech, and they stubbed their toes on Friday. Maybe just need to take a breath. So biotech pulled back a little bit on Friday with Nasdaq. How about the semis? They were quiet and they broke out of a box. Semis were in a box over here, and you can see they broke out over the past week. Look at the weekly at all-time highs. So semis leading the market is never a bad thing. If you want to look at the IBD 50 ETF, did it finally break over its numbers? Let's see. If you want to be bullish, you could say it crossed over its descending trend line and breaking out. Had a soft day on Friday. A red candle high means it traded up during the day, and it was the highest high going back 20 bars, and then it closed down on the day. That's a bearish reversal candle, so we'll have to watch. Maybe this trend line will be some support. That's the IBD 50, not knocking the socks off. If we look at the FANGs, this is the IBD breakouts. Forgot that. Here's the FANG index, which is more pure FANG index, a microsector FANG ETN. The broader based canaries did better. Right below the PSAR dot, mobile breakout, had a kahuna to the downside. I don't think this looks bad. I'm not running out to buy it. What else could we look at here? We could look at all the hype. I hear a lot of positive things about Cathie Wood. I look at ARC Tech and Robotics sideways, but above the moving averages. Innovation failed at the chandelier. Revolution Genomics failed at the chandelier stop. Innovation looked pretty good, but had a soft Friday. Israel way below 200. Next Gen Internet broke out, but came back in. Space exploration too messy. How about Bitcoin? Bitcoin looks like something you might want to buy. This is GBTC. And I actually think, let's see, we'll go back into TradeStation for a second. So Bitcoin is 43,000. It used to be that the GBTC was at a premium to Bitcoin. And that was Friday. It almost looks like it's cheaper than the Bitcoin. If this was a typical stock, pull back to support, breaking out, mobile breakout, John Person buy, pocket pivot. I think this looks interesting. All right. Let's take a look at the dollar. Dollar bullish. We know the dollar came back some this week. It's right up at its resistance, both the chandelier stop and the PSAR. You can see it's at resistance on the weekly chart as well. The VIX we know is flat. Let's look at TLT. That's short. We don't want that. Is it up at the top? TLT pulled back. It ran up. You could see on the bad ADP as the rates fell, but as the rates recovered, TLT came down. It's got some nice support underneath. Dollar was up. You know what that means for gold, don't you? Yeah, it means gold was weak. Is gold breaking down? Failing at the 200 ISO failure? Does it go down and test the 100 and bounce? That's the dash line. Silver. Broke down. And how about gold miners? They can't look too good if those are that weak. Also broke down below the 100-day moving average. Actually, not the 100. Is that the 1,000? I think it's actually the 1,000-day moving average. So metals look bad. So again, remember that I said if the market, if the economy is perceived as good, reinflation trade is in, the everything else market, dollar up, oil up, technology down, bonds down. If the economy is bad, dollar down, technology up, interest rates down, and bonds up. So you have to, this is going to be back and forth. It's not bull versus bear. Now it's the economy going to be oscillating as well. It's a tough market, probably toughest market I remember. All right, so after my top-down review, which is now 45, 50 minutes in, and you're probably wondering what the hell you're listening to, I think I'm going to be on the bullish side. Now I'm going to bring over the industry groups, warehouse view. We're going to look at the first top 5 bullish ones. I'm going to put my buy watch list and talk about Generac and maybe a couple banks. So I have 174 groups. If I look at groups that have momentum to the upside, I've got 71. Momentum to the downside, I've got 10. Look at some of those to the downside. These are a bunch of things that have been leading. This is that the ones that have been working are now the laggards. Autos, biotech, generics, med equipment, life sciences. large pharma, healthcare facilities, application software. So again, what was leading flip-flop this week? Now, short-term indicator. If I look at 5-day down, I've got 25. If I look at 5-day up, I've got 71. So you got to be in the bullish camp here. Again, is it possible we got a correction coming? Absolutely. Do I think the market's going to blow up and roll over? You know, when they start tapering, raising rates, the market's going to hiccup. But I'm still in the we're more likely to get a correction camp than a bear. So let me open these up. So if I right click on e-commerce discretionary, change to index group, Mercato Libre, on the eBay of South America. I mean, sometimes I will open up Marcus Smith to see what they call these things as well. Do they call that a cup and a handle? Let's just pull that over here. Yeah, it's just a little ESPN news bleep. I went to Michigan, so I'm not a Florida guy or Florida State guy, but it's a sad day here, sad weekend because of the death of Bowden. So here's Mercado Libre, and they are calling it a cup. There's no handle yet. Third stage base. You might look for a handle and breakout. It's had a nice little run up this right-hand side, but Mercado Libre has been a nice play. It looks great still. Earnings per share growth doesn't excite me. It trades at a huge multiple. It came to the top because it had a big day. I think earnings must have come out on Thursday and on huge volume. That's Mealy, expensive stock. Now, one that I was shorting up until recently was Wayfair, and Wayfair also reversed on earnings. I like stocks that drop below the 200 and fail, and you short them when they come back down through there. But this one has bounced, and look at it now, Kahuna's pocket pivots. Certainly wouldn't want to be short right now on Wayfair. U.S. Auto Parts. This is one I don't know anything about, but you will see it on my buy watch list. Let's see what Marcus Smith gave it a pattern, PRTS. I use a lot of tools. People who know me know that. I've started getting rid of things I don't work. So there's your cup, there's your handle, and this is the pivot point where the breakout comes. So I like it when they're finding patterns on the stocks that I like. U.S. Auto Parts looks interesting here. Again, don't love the fundamentals. It's a newer, well, it has a big revenue growth here, and that's something that I like to see. It's under demand, U.S. Auto Parts. And there's the index. I don't go further, now I go back. Consumer electronics, Microvision. I don't know if this is a meme stock. I felt like it was there. This is a nice looking pattern. Mobile breakout from a squeeze. Pocket pivots on Thursday, a couple kahunas in a row. Huge volume. It probably is a meme stock. Look at the demand that's under. Can't argue with the pattern. I'd rather buy it above the 50 than below. And that's the only one above the index. So go to the next one. Casinos and gaming. There's been a couple things going on here. One, there's been some activity on the sports betting online with some M&A activity, and then I think Wynn had less bad than expected numbers. Penn National, I made a lot of money on this a year ago. I'm out of it. Is it getting ready to run? Mobile breakout from a squeeze, person buy, pocket pivot, kahuna. I guess an improvement in relative strength. It's got some earnings coming in at least, well, in this past quarter, because this one's already out. Maybe, but don't predict. Don't front run these things. Let's see if they make a move. So I might watch Penn, but I'm not buying Penn here. When, same story, too much overhead supply. MGM Resorts, no. not my play. Here's another one that I made money on last year, Caesars. It may turn out that buying it off the 50 was the right thing to do, and I was tempted. It had good earnings. I think I sit back and I wait and see. I like to rather buy them in an uptrend, and these things have pulled back a lot. The one I did like in the group, though, was Boyd Gaming, BYD here. It's got fundamentals, which I like. It's got earnings per share growth. You can see that the revenue has turned around from 209 million to 893. And I believe it closed less than 1% below, above the 50 now. So it closed above the 50, and that's what I'm looking for the others. And you'll see Boyd Gaming on my list. Other financial services, well, we know financials are going to be strong. This is another way of playing Bitcoin. Mira patent portfolio, they're a miner. Bitcoin price goes up, they go up. It looks kind of like the GBTC chart, but it looks like it's breaking out. Now, I don't know why they're all in different groups, but Mira is one. Riot blockchain, that at one point was a biotech. Not quite as broken out as Mira, but it looks like it wants to run. And one that I gave before got a pop and then it dropped was MicroStrategy. Again, similar pattern. You can see this one ran up to 1,300 on the Bitcoin run to 65,000. I'm going to probably get into Bitcoin. God, I hope my son's not listening to this because he'll be laughing when I said that. I'm considering getting into Bitcoin. I would probably get into it via one of these ETFs, either GBTC or one of the miners. I've made money in them in the past, but they're not for the faint of heart. Entertainment facilities, I don't play this. I don't know why. Well, I guess it's up here. Why would this stock have made my list? Because 2 days ago, it's looking at 2-day force. It had a big up move, 12% up move on 108,000 million shares. And force is as today's price minus yesterday's times volume plotted, and you take the 2-day exponential moving average. Well, gee whiz, golly, that's a lot of volume. It doesn't take much to make my list. I'm not interested in this. Kind of looks like a horrible downtrend. SeaWorld did catch my interest. I have fond memories with my first child. We lived in San Antonio, and my wife just would not pop the baby out. So we would spend hours walking in the heat. That just a beautiful SeaWorld in San Antonio in the hills, and to among other things, to stimulate childbirth. Pull back here, I was watching it. It broke out above the 50, had a Bible gap up. Its fundamentals are improving with a reopening trade. I don't have enough reopening trades. I may be looking at SeaWorld. I got to de-risk my portfolio that has too much technology. Live Nation, similar to SeaWorld, looks like it wants to break out. I personally think that SeaWorld, which is outside, makes more sense than Live Nation, which is inside. Regional banks, pick your poison. Here's an expensive one, SVP Financial Group. Fundamentals have weakened, no dividend, but if you want to look at chart patterns, sideways movement, and 2 kahunas in a row, pocket pivot, person buy, mobile breakout from a squeeze. That's my favorite pattern right there. US Bancorp, a little bit lower in the pattern. Citizen Financial, a little lower. Signature Bank, ready to break out, also an expensive bank. Truist was one of the ones I had charts on. Look at this, multiple kahunas, improving relative strength and a flat stock. Mobile breakouts from a squeeze. Fundies are okay. Pays a 3.2% dividend. What's not to love? PNC breaking out. Huntington breaking out. Fifth Third getting close. There are so many good-looking banks. it's really hard for me to tell you which is the best one. I would have one though. Here's that CBI. Again, I'd rather it be above the 50, but look at that. One red one and three blue ones, improving relative strength sitting on the 200. Mobile breakup from a squeeze. It's just got to clear this area here, which is about $1, $2 above. I think that looks good. I think regional banks look good. If you want to be simple, just buy KRE. Looks like the others, pays a 2.2% dividend. You reduce independent company risk and take the risk of the sector as a whole. Multiple kahunas, pocket pivot, new person buy, took out the 50, mobile breakup from a squeeze. Love that pattern. Well, I lied. I said I was going to do top 5. I'm now on number 7, so I stopped. Investment companies, don't really know what to do with these. MVST, no dividend, big demand. 24 million shares on Friday versus an average of 1.9. It smells like Wall Street bets. I already told you Bitcoin looked good. Don't know this, grid dynamics, it's already run. 8, semiconductor devices. Micron, which has been a laggard, is breaking out. Look how beautiful the weekly is. Blues and greens, like that. Great fundamentals. Maybe you can buy this one, although remember you're buying laggards. I like the 4th one down. Xilinx, a little loose and up too high. Analog devices. Lattice semiconductor. Yeah, it's up too high as well. If I draw trend lines, it can go higher. It's breaking out. Bongo turned green. Good fundamentals. I like this one as well. Rather buy them on a pullback. Last week I liked ON. It's on my list. Go take a look. And it had a big bounce on earnings. Micron probably the best, or at least one I like the best. Diversified banks. Yeah, that's all I can say. Yeah. Bank of America breaking out above the 50. It is above the 50 a tad, so it's above. You got a kahuna, pocket pivot, person buy, global breakout, recent squeeze. Look at the earnings per share accelerating, modest dividend that's been increasing. I have a stake there. Wells Fargo, I have a stake here as it broke out this week. Banks. Look at the growth rates. JP Morgan, pullback, broke above the 50 on Friday. Banks. Citigroup, where my daughter works, but she doesn't know anything about the stock, also looks interesting. Banks. Again, if you're heavy technology and you want to buffer them, I think banks look interesting. On the auto parts, Veoneer got a bid by somebody this week. So off the table, Westport Fuel Systems, they take trucks and they turn them from gas to fuel, to alternative fuels, natural gas, etc. Too far down for me to be interested. Goodyear Tire. So I gave you a bunch of interesting looking stocks. Right now, short term I'm bullish, so I'm not going to spend much time to the downside. We are now at 1 hour and 8 minutes. I want to do a couple things before this is over. First thing I want to pull up is my buy watch. I give this to you every week. I don't give it to you in a text file. I am not vouching for this. I am not telling you I'm buying any of these. Here's what I'm doing. All right. I like to create this list. This XPO Logistics, just ignore it. The numbers make no sense. There was a spinoff, and it looks like a horrible stock when it's actually not. We'll just ignore it for now. First, let's look at what industry groups I'm interested in. Agrochemicals, machinery, a lot of agriculture, a lot of regional banks, diversified banks, brokerages, so financials, investment companies, investment management, other financials. Do you think I might, in wealth management, do you think I'm interested in financials? Absolutely, especially if I think that rates are going higher. I've got a bunch of insurers here. I got life insurance, and I've got, there was another insurance company somewhere. So these are the industry groups that many of which we talked about. Some of these stocks you've already seen. Now, if you don't know me, you're thinking, well, how the hell does, excuse my French, does anybody watch 56 charts? I don't know. I don't do that. Here's what I do. I load them up into a radar screen in TradeStation. And I have radar screens for John Person stuff. This is a combination of Q and Dr. K stuff, for example. You notice over here, I have a free indicator for next earnings. So if I can rank by days and I can see what stocks have earnings coming in. I don't know if my buddy Sager could do it, but I know he listens to my videos as I listen to his. Love his tools. It'd be really cool if we had an expected move or implied move column. So maybe we do on one of the others. He'll point it out to me if we do. And maybe that's what he looks at some of the pressure and different things. But I'm just curious, I will be able to look at these and understand the implied moves. I can tell you that we're starting to slow down on the growth stocks that I follow. But we do have a lot of earnings. Remember I said it's a judgment call to stay with the stock with earnings or not. It's bad judgment to not know when your earnings are. Now, some of you are thinking, but I don't have this program. All right. Then you can go into Thinkorswim. And you have a market watch. And I've actually, with help, duplicated a lot of the same indicators here so I could track. So I'm not watching these all day long in charts. I'm putting alerts buy if, and then I'm getting alerted. So let's look at this list in HGSI. And who did I want to do a workup on? Let's talk first about one of my old-time favorites. And I guess let me know if you're still in this, one of my best calls ever. When did I make this call? I made this call right in here. I think it was this day here. May of 2020. Generac was trading right under 100. I made it probably here. And of course it gapped up the next day after I made the call and I bought it. Generac has ran close, well, that was then. It's ran up to over $400. So in a little bit over a year, it's a 400% return. Generac looks interesting here. You've got your clear-cut uptrend pulling back to support, uptrend pulling back to support. Now, when I look at this in my TradeStation, and let's go to Generac. I have a bunch of different lists, so. Pull back to support, generated a new John Person buy signal. It's in a weekly John Person buy signal. When I look at Sager's tools, again, it's sitting on right on support. Now, this bearish on the weekly, I like buying it off of support here. So I have some Generac. Generac has pulled back. I'm going to start to add to my Generac position. So this is a setup that I'm looking for. Let me show you one that I'm thinking about starting. Let's look at Riot Blockchain. Not exactly the world's best thing for me to talk about, but I'm going to talk about how I might play it. If I go into TradeStation, and I know where it's at. It is further over here, I think. So it broke above a descending trend line on the weekly. It broke out of a triangle pattern with a new buy signal on the daily. To me, this looks compelling. That's why I like it. Now, I'm going to go back into HGIS chart. Let's open up the data window. Let me find it and bring it over. So what do we know about Riot here? The high was 35.76. It closed at 34.97. This dashed blue line is I think let's see if I can find this thing. That's the 100-day moving average. I probably don't need to go that far up. That's at 36.61. So I'm the kind of guy that wants to buy high to go higher. So then I look at the last four, I look at the lows, 32.81, 30.85, 31.75, 30.79. All right. The 50 is sitting where? 31.84. All right. So I know that I'm going to stick my stop at the bottom of the lowest bar in the past four. And I'm going to put my stop. Now, isn't it funny? I'm picking my stop before I even pick where I'm buying the stock at. So my stop is at 30.75. Never mind. Stop. Hit OK. So I know where my stop is. My buy is going to be right above the high of that day. So my buy is going to be at 35.80. I already see a problem with this trade. I like to buy when it takes out the prior high, and I like to put it a couple of pennies above it. Now, somebody that knows me can tell me what the problem with this trade is. The problem is this. I said I'm going to buy it at 35.80. My stop is going to be at 30.75. So I'm risking 5 out of 35. That's about a 14% risk. Let's try that. 35.80. Divide that by 35.80. Yeah, 14% risk is probably too high, and it might keep me from taking the trade, but It doesn't surprise me. This is a relatively volatile stock. So look at the demand that's under. So let's say I'm willing to take that trade. Now, how do I buy this? I could go into Thinkorswim, and I could go into Analyze. And let's say I'm interested in Riot. I want trade. And let's say I would buy something that is probably a September option I'd be interested in. Now, looking here, that it closed at 34.97. I could push my buy price down, but I still think this is risky, so I'm going to leave it where it's at. So let's say I want to buy an at-the-money call in September. That would be $4.50. Ouch. And if I'm risking $5, I better get at least $5 back. So let's say I'm going to sell. Let's try for a 2-to-1. Let's look at a $45. Let's go sell a $50 call. So what I just created was a vertical trade. I am going to buy Riot 35 calls, except I don't want weekly. Let me change it to the monthly. I'm going to buy 35 Riot calls. I'm going to sell 45 Riot calls. And it's going to be $2.80. So my maximum gain is $10. The maximum I'm risking is $2.80 a share. So let's go into, and if you already know options or don't care about options, you have my permission to leave. Let's look at how I'm going to look at this trade and find my right program. Because I kind of like that trade if I want something that I'm controlling my risk. So I'm opening up another program. Or I'm not. Call customer service. Well, that ain't going to happen today. All right. So there are a number of trades I could take. To me, this is the safest trade. So if we looked at it back here so I apologize, I've got to call them on Monday and convince them I'm not a professional trader, which I'm not. 30.75, 35.80. All right. I'm risking $5, but I have infinite gain. Okay. This is not the market where I'm getting infinite gain. I don't think Bitcoin has infinite gain. So the trade that I'm going to consider here is going to be this option trade. And if I analyze it, here's what I see. Now, is this enough? Hold on a second. Oh, it's just not the whole distance. All right, somehow I gotta, just make sure I did this correct. Well, that's not working the way I want it to work. Let's go back here. So I'm buying, going long a 35 call, selling short a 45 call, paying $280 for the trade. Now I can go into here and pull up this window and say, I want to buy at market, or you could put limit. Say a limit of 280. Here's my trade, call, buy a call, sell a call. I'm going to submit it. If Riot has marks, trade, and then I can put in the price here. And then I can trigger it if the trade's above. Or I could put in the market was trading up. Or I could trigger, put in out Bitcoin. So I usually use my phone, which to me is easier. So I might look at a trade here based upon a call, a spread. Another way, which I'm not going to recommend on this, would be, let's go back to trade. And let's say I'm looking at the money, so it's $35, buying a call, selling a put, and then buying a protective put. All right, this is my Scott synthetic, which is also, I've learned, a risk reversal type trade. So I'm buying a $35 call, selling a $35 put, and buying a $30 put as protection. My cost of entry here is $1.98. So it's another $2 trade. The benefit of this trade, I just don't know why it didn't analyze the right way. All right, I guess part of the problem is how do I increase? I never use this tool, so I apologize for that, not knowing how to expand it. The benefit of this trade, well, I like the fact it goes higher, is that the maximum I can lose on this custom trade here, let me take this out. The maximum I could lose is $2, which is okay, but I could also lose the $5 here. So I could lose $7 on this trade. On the entire stock, with my stop in place, I was going to risk $5. Now, the benefit of this trade here, instead of the other trade, so I'm risking more money, but I'm not capping my upside. So this trade here is kind of just like buying the stock, okay? But I'm buying it for $1.98. Then I've got my $5 of risk here. All right, maximum loss is 7, but I have an unlimited upside. And the beauty of this trade, and then I'm going to shut up and say goodbye, is that I'm not capping my upside. I could sell the put spread after it goes up a little bit and take profits on it. I don't have to keep this to completion. And I can do the same thing and I can unload the whole position if my stop loss is triggered. So lots of different ways. You can buy the stock. You can buy a call, but a call by itself is expensive. A call by itself at the money is $4.50. All right. I can sell a put by itself at $4.85, but the most I can make on that put is $4.85. So you can buy a call, unlimited upside, expensive. Your downside's limited by the price of the call. Sell a put, unlimited downside, and your upside is, well, your upside is tied to the price of how much premium you got on the put. It's not unlimited downside. If the stock goes to zero, you got to buy it for 45 bucks or for 35, whatever you bought it for. It's still a lot of money. You can do a spread, which reduces the cost but caps your gain. Or you could do something like the Scott synthetic that I showed you, where you could buy a call and sell a put at the same strike price, buy a protected put so you don't put your account at risk, and get unlimited gain. Have a great week. I'll get my options tool sorted out, and we'll talk next week. Thanks, everybody. Trade safe. Don't have to trade often. Bye.